Dumela. I will be doing tangible assets today, including asset disposals. As you know, tangible assets are just assets that we can touch and we use them to generate money. So basically, we just use them within the business. And as we use them, we will recognize as a value for using the asset. We will recognize depreciation. Depreciation is just the cost of using the asset. And an asset can be depreciated using either the straight line method or the diminishing balance method. With the straight line method, depreciation is always calculated on the cost price of an asset. And with diminishing balance method, depreciation will be calculated on the carrying value of that asset. Let's start by recognizing an asset and depreciation. This will be like a storyline and it'll be like a novel. And I hope it'll keep you hooked until the end. So we've got Muhludi Tutoring, and Muhludi Tutoring purchased 4 laptops at 80 Rand each by EFT on the 1st of March, 2022. And these laptops were purchased from Eve Tech. As they've said, I just need you to highlight each because that is very, very important. Then they say equipment is depreciated at 20% on diminishing balance method. Highlight diminishing balance method. Let's start from the beginning. These laptops were purchased for cash. So where will we record them? In the month of March, on the 1st of March 2022, they will be recorded in the cash payments journal because money went out. At the end of March 2022, it'll be posted to the general ledger for the month of March 2022. And in total, please note that Muhludi Tutoring paid 80,000 times 4, which is 320,000. Remember, they purchased 4 laptops from EveTech, pre-marketing there. So we've got 1, 2, 3, 4. But because we purchased them for cash, we'll record them in the cash payments journal. The source document will be BS. The day will be the 1st. These laptops were purchased from EveTech. And the bank, you'll have 320,000. But because we don't have a column for equipment, that'll go under sundry. and we'll record it as 320,000. At the end of the month, this 320,000 will be posted to the general ledger. In the general ledger, we are going to debit equipment with the 320,000. Since the equipment account is an asset account, and assets increase on the debit side. We will start with 2022 March 31, bank, CPJ, and the amount will be 320,000. Then you balance it off, find your balance carry down, which is 320,000. Done. At the end of the financial year, Mutluri Tutoring needs to recognize depreciation on these laptops if they have been used for the entire year. As mentioned above, equipment is depreciated at carrying value, which is the diminishing balance method. Since they were purchased on the 1st of March and our financial year is the 28th of February, 2023, will be our financial year. So our financial year will run from the 1st of March, 2022, up until the 28th of February, 2023. Since we've used it, well, them for 12 months, we are going to depreciate them for 12 months. However, they don't have accumulated depreciation since these are new. All right, they were not there last year, they're new. We just bought them on the 1st of March, which is the beginning of the year. So for accumulated depreciation, we'll have 0. And we'll just take 320 times 20%, which is the depreciation rate, times it by 12 over 12, you will get 64,000 Rand. This amount must be recorded in the general journal by debiting depreciation, which is an expense, and crediting accumulated depreciation on equipment, which is just a valuation allowance. In the general ledger for February, we will debit depreciation, as I've said, which is an expense, and credit accumulated depreciation, which is a valuation allowance. It reduces the value of the asset. So the more accumulated depreciation we have, we will actually credit accumulated depreciation. It's the sum of all depreciation of an asset, which is the sum of um, cost of using that asset, which is your depreciation. Just like any journal entry, this must be posted to the general ledger on the 28th of February 2023. We will debit depreciation because it's an expense. It increases on the debit side, so it's a plus minus. We'll write 28, 2023, Feb 28, accumulated depreciation on equipment, general journal, and the amount will be 64,000. Accumulated depreciation increases on the credit side, since it represents the net decreases in the value of that equipment. So on the credit side, we'll have 2023 Feb 28, depreciation general, and the amount will be 64,000. Because that is a financial position account, we'll just balance it off and find the balance carried down as well as the balance brought down. All this information about the cost price of equipment and the accumulated depreciation as well as depreciation must be recorded in the tangible asset note. So your tangible asset note looks like this. The top part, we have the carrying value at the beginning of the year. Then we have cost and accumulated depreciation. So cost and minus accumulated depreciation at the beginning of the year will give you carrying value at the beginning of the year. These are costs that we have had from the previous financial year. But for this specific example, we don't have any of those because this equipment was not there last year. However, under movements, we've got three things: additions, disposal, and depreciation. Add, again, add. Additions, disposal, as well as depreciation. Additions must be at cost, disposals must be at carrying value, depreciation, obviously. We bought this equipment, even though we bought them at the beginning of the year, they were not there last year, so we can't say it's cost at the beginning of the year. It's under additions because they were bought this year. So we will put 320 for additions at cost. As I've said, disposals must be at carrying value. Disposals is when you get rid of the asset, when you sell the asset, which is what we haven't done so far. If you were to calculate disposals at carrying value, you will take the cost price of the asset minus its accumulated depreciation, and you will put it in brackets. Depreciation will be 64,000 for the current year. So our depreciation for the current year, as I've said, will be 64,000. We put it in brackets because it reduces the value of your asset. So for me to get net movements, I took 320,000. I subtracted 64,000. It gave me net movements of 256, which is the one over there. So cost at the end of the year will be 320,000. Accumulated depreciation at the end of the year. This is how we calculate accumulated depreciation. We take the balance of accumulated depreciation at the beginning of the year, which is 0. We add current year depreciation. We subtract accumulated depreciation of the asset sold, which is 0 as well. So our accumulated depreciation will just be 64,000. To get carrying value at the end of the year, you will take cost at the end of the year, which is 320, minus accumulated depreciation at the end of the year, which is 64,000. That will give you 256,000. We have nothing for vehicles. Let us continue with the same example. Now it tells us that we purchased these assets on the 1st of March 2022. Fine. From EVTech, equipment was depreciated at 20% on diminishing balance method. They want us to record the above transactions on the 28th of February 2024. So nothing has happened so far. So we've had these equipment for the entire year now. So you will know that on the 1st of March, we had accumulated depreciation. So this equipment was used for the entire financial year. So we need to record or calculate depreciation for the entire financial year. The cost of this equipment will be 320. Accumulated depreciation at the beginning of the year will be 64,000. Carrying value at the beginning of the year will be 256,000. Remember, all of this is from last year. Whether we are depreciating using carrying value or diminishing balance or using the cost method, we always have to calculate carrying value at the beginning of the year. Because here we are depreciating using the diminishing balance method, we will take the carrying value at the beginning of the year, which is 256,000, times it by 20%, times it by 12 over 12. It'll give us depreciation for the current year, which is 51,200. When we record it, you will debit depreciation. You will credit accumulated depreciation, as we always do. It'll be recorded in the general journal. You'll debit depreciation by 51,200. You'll credit accumulated depreciation by 51,200. As you've said, just like any other entry, this will be recorded in the general ledger. Depreciation is always closed off against profit or loss at the end of the year. So every year we're going to have depreciation, which is an expense. You'll basically debit depreciation with accumulated depreciation by 64,000 and close it against profit or loss. If accumulated depreciation is a financial position account, it will have balance brought down from the previous year, which will be the 64,000. It will increase by current year depreciation, which was 51,200. Then you can calculate balance carried down as well as balance brought down. All this information will be recorded in the tangible asset note again. We are now in the 2024 financial year. Cost at the beginning, which is the cost from the previous year, is still 320,000. Accumulated depreciation at the beginning will still be 64,000. Carrying value at the beginning will still be 256,000. We didn't buy any equipment, so additions at cost is 0. We didn't sell any equipment, so disposals at carrying value will be 0. But we do have depreciation, which was 51,200. Cost at the end is calculated by taking cost at the beginning of the year plus any additional cost minus cost of the asset sold. But all of those are 0, so cost is still the same, 320. Accumulated depreciation, though, will be 64,000 plus 51,200 minus accumulated depreciation of the asset sold, which is 0. So accumulated depreciation here will be 64,000 plus 51,200, which will give us 115,200. Carrying value at the end will be 320,000 minus 115,200, which will be 204,800. We got nothing about vehicles. Now we go into the next financial year. Now they're saying that while they're still telling us the same story, pitches for laptops from Eve Tech on the 1st of March 2022. A laptop was sold, to Veritas College, 45,000 cash on the 30th of November 2024. Interesting. So that 45,000 is actually the selling price. Only one laptop was sold. Nothing has changed. We still depreciate on diminishing balance method. But now we need to record this in the year ending 28th of February 2022. Note that we sold a laptop for cash. So on the 30th of November, this will be recorded in the CRJ cash receipts journal. At the end of the November, it will be posted to the general ledger for the month of November. The cost price of the laptop sold is 80,000 Rand. I'm repeating it again. We had 4 laptops, right? But now one of them is being sold. So we're going to be left with 3 laptops. There was 4, right? But one of them, what did we do? We sold it. When we sell it, we're going to record it in the CRJ. We don't know who we sold it to, so I'll just write asset disposals and the details. This is the valuation count. That's why we're debiting it in the general journal. So when we sell it, I need to specify though, the 45,000 Rand will be recorded in the CRJ, okay? But when we get the general journal, we have to get rid of the cost of this asset because it's sold. To get rid of it, we're going to debit the valuation account, which is asset disposal, and credit equipment, which is your asset, by 80,000. So this entry will be posted again in the general ledger. However, the 45,000 Rand, as I've said, will be recorded in the CRJ. It was sold to Veritas College, and the bank will have 45,000. We don't have a column for asset disposal. We will therefore record it under sundry 45,000 as asset disposal. At the end of the month, the 80,000 must be posted in the general ledger. In the general ledger, equipment will be decreasing by 80,000 rand. Since it's an asset account, equipment account will decrease on the credit side. Remember, we bought equipment, but now we're gonna decrease it. I don't know why I wrote CPJ. It's supposed to be balance brought down there. I will repeat this. Equipment increases at cost price, it decreases at cost price. So since we sold it, we're going to decrease it at cost price. No selling price at cost price. Assets are always measured at historical cost. Cost price is the price we paid for the item. Remember this laptop that we're selling, we paid 80,000 for it. So that's why equipment account will only decrease by the cost price of the laptop that was sold. We had 4 laptops. So if we get rid of one, we are left with 3. So the cost of the remaining 3 will be 240,000. You got it? I had to bring this information back. But never mind that information. So we know that no equipment was purchased in the 2025 financial year. Actually, we sold one. So it started on the 1st of March 2024. So when we depreciated, this equipment was not used. 3 of these equipment were used for the entire year, but one was not used for the entire year. Remember, we depreciate for as long as we're using it. We know that cost at the beginning was 320. Accumulated depreciation at the beginning was 115,200. So carrying value at the beginning will be 204,800. So this is cost of all equipment at the beginning of the year, right? And this is accumulated depreciation of all equipment at the beginning of the year. But something happened here. On the 30th of November 2024, one laptop was used only for 9 months because it was sold on that day. Depreciation for equipment will be calculated at different intervals in the current year. 3 of these will be depreciated for the entire year. However, one will only be depreciated for 9 months in the current year. So this is what we're going to go back to. From when we bought this equipment, we bought it, remember, in 2023 on the 1st of, in 2022 on the 1st of March. This equipment that year, we depreciated it for the entire year, right? So at the end of the year, its depreciation was 16,000 and then the carrying value was 64,000. Just on this one laptop. In 2024, we also depreciated this laptop, but we used the carrying value from last year, which was 64,000 to calculate depreciation. It was depreciation for the entire year, which was 12,800, right? So by the end of the year, the cost was still the same, but accumulated depreciation is now 28,800, which is made up of this 12,800 plus accumulated depreciation at the beginning of the year. So it'll give us this 28,800. So carrying value at the end of the year of that year was 51,000. All right. Now we are in the current year. When we start the current year, cost is still 80,000. Accumulated depreciation, however, is 28,800. We need to depreciate this equipment, but we can't depreciate it with all the other equipment, the other 3 equipment. So we need to separate it. So this is the cost of the equipment sold at the beginning of the year. This is the accumulated depreciation of the equipment sold at the beginning of the year. This is the carrying value of the equipment sold at the beginning of the year. We're going to do this. We're going to separate them, the remaining and the sold. Cost of all equipment is 320. Remember, the 80,000 is still there. Accumulated depreciation of all equipment is 115,200. Remember, the 28,800, it's in there as well. Carrying value at the end of the year is 204,800. So what I'm going to do is I'm going to subtract from the cost, I'm going to subtract the cost of the equipment that was sold. Subtract the accumulated depreciation. And then the cost of the remaining will now be 320 minus 80 will give you 214. 115,200 minus 28,800 will give you 86,400. So that is accumulated depreciation of the remaining. So I'm just left with the remaining. Now, when I depreciate the remaining, I am going to take that 153,600 multiplied by the depreciation rate, which is 20%, and multiplied by 12 over 12. Okay. However, the sold was only used for 9 months. So when I depreciate, I'm going to take the 51,200 multiply by 20%, multiply by 9 over 12. So in the current year, depreciation of the sold will be 7,680, which is just for that period when it was sold. So on the day it was sold, which is 13 November, the cost is still the same. But accumulated depreciation has changed from 28,800 to 36,480. I just added current year depreciation. So I'm trying to calculate carrying value on that date, okay? So the carrying value on that date will be 43,520. This is just on the equipment that was sold. You got it. Let's calculate depreciation of the remaining. I did talk about it. We're going to take the carrying value of the remaining, which is 153,600, times by 20%, times it by 12 over 12, because the three were used for the entire financial year. That's why we depreciate them over the entire financial year. Because they were used from the 1st of March 2024 up until the 28th of February 2025. So the remaining, at the end of the year, the cost of the remaining will be 240. Accumulated depreciation of the remaining will be 117,120, which is accumulated depreciation of the remaining at the beginning of the year plus current year depreciation of the remaining. It'll give me accumulated depreciation at the end of the year. So carrying value of the remaining at the end of the year will be 122,880. When I record this in the current year, depreciation will be made up of the depreciation of the remaining plus the depreciation of the sold. So we'll debit depreciation with the sum of the two and credit accumulated depreciation with the sum of the two, which is the 8,400. This is total depreciation of all equipment that we have for the entire year. But remember, one equipment was only depreciated for 9 months. The other three were depreciated for the entire year. Okay. The equipment that was sold, we're going to process the following entries. We're going to debit asset disposal and credit equipment at cost price. Then we're going to debit accumulated depreciation. You're reducing accumulated depreciation by the accumulated depreciation of the asset sold at the end, at the date the asset was sold. Accumulated depreciation at the date of sale was 36,480. So our total accumulated depreciation will have to decrease by the accumulated depreciation of the asset sold, which is that 38,480. You debit accumulated depreciation, you credit asset disposal, which is just the valuation allowance. Now we're going to calculate profit or loss from the sale of this equipment. It was sold for 45,000. On the date of sale, its carrying value is 43,520. So I'm going to take the selling price of 45,000 and minus the carrying value as at the date of sale. If I get a positive answer, then it means I made a profit. If it's a negative answer, then it's a loss. When your selling price is more than the carrying value, you made a profit. When the selling price is less than the carrying value, you made a loss. To recall this, you will debit asset disposals by the profit and credit profit because its income profit increases on the credit side. That's how you will record it. Current year depreciation, we're going to debit accumulated depreciation by the total depreciation of both the assets sold and the remaining equipment. close it off against profit or loss. With accumulated depreciation, it is a minus plus the balance of accumulated depreciation at the beginning of the year will be 115,200. We're going to add depreciation of both assets, which is that one over there. And then you're going to decrease this account by the accumulated depreciation of the assets sold at the date of sale, which was, I forgot it. It was 38,480. 153,600 minus 38,480. You will be left with the accumulated depreciation of the remaining equipment, which will be 117,120. Okay. You're going to prepare what we call the asset disposal account, which is always the same. You debit it with the cost of the equipment sold, which is 80,000. You credit it with the accumulated depreciation of the equipment sold, which was 36,480. Bank or debtors control or general journal will be recorded on the credit side of this account. It's actually general journal if it's sold on credit, but because it's bank, it will be CRJ 45,000. The profit will be on the debit side, which in this case will be 1,480, and this account will balance. It'll always be this way. If it was a loss, that loss will be on the credit side, but everything remains the same. How do we record this? Cost of equipment at the beginning of the year, we just calculated was 320, minus accumulated depreciation at the beginning of the year, which is 115,200. Carrying value at the beginning of the year will be 204,800. There was no equipment purchased. However, there was equipment sold. We are going to record it here at carrying value, which is the cost of that equipment minus accumulated depreciation of that equipment. Note that this 36,480, it is the accumulated depreciation of this equipment on the date of sale, not at the beginning, on the date of sale. You see, there it is. Ish, this flow is just annoying me. I can't record in peace because I'm always coughing. Apologies, apologies. I can't write it there, it's fine. So carrying value of this equipment sold at the date of sale will be 43,520. Depreciation of all equipment was 38,400. We calculated this. Both will be in brackets. So that's how we got the movement, which is 81,920. Cost at the end will change. We're going to have that 320, you minus the cost of the equipment sold, which was 80,000. There was no equipment purchased, so the cost at the end will be 240,000. Accumulated depreciation will be this 115,200 plus 38,400 minus 36,480. It's balance at the beginning of the year plus current year depreciation as accumulated depreciation of the sold. which will give us 117, 120. 240,000 minus 117, 120 will give us 122,880. And that's it. That is the end of this beautiful novel. I did this with one of my students that I teach online. And I just thought of telling the story because she was struggling to understand asset disposal. So I prepared this while I was tutoring her, and I hope it'll help everybody else because then after I've explained it, I wish I could explain it with the energy. Unfortunately, I'm not okay. I'm okay. I've been coughing for a while. I don't know what's going on. This flu is on another level. Yeah, but yeah. Once I explained it in this way, as though it's a storyline, she managed to make sense out of everything. Check out my videos on asset disposals and tangible assets. They will actually help you a lot. And that'll be it with respect to me. I think. I hope you enjoyed everything. And please continue watching the channel. Let your friends, let everybody know about this channel. And continue watching it, saying, let's do this together, guys. It's awesome. Accounting is just beautiful. Please don't be selfish. Share with others. Okay? And all I can say is, Khozo.